You know, since Apple's changed the way it wants Wall Street to look at it in terms of moving away from unit sales and more towards a service revenue model, there have been really a lot of questions surrounding this. So how should we think about Apple? Should we think about it, let's say, on an installed base level? And in the HSBC note, it says that the installed base looks pretty stable, but there are a few catalysts for further penetration. How should we think about these numbers and Apple's business now?
Yeah, I mean, look, it's a great question. It's been a perfect storm ever since Cook pulled the iPhone Houdini Act. And in our opinion, the way that we view it is on as an install base perspective. I mean, right now, you have 350 million iPhones coming up for an upgrade over the next 12 to 18 months. And part of why there's been a fire drill in Cupertino is to stimulate demand, which has really lagged on 10R, specifically out of China. So that's why right now, going to holiday season, this is definitely a pivotal sort of fork in the road time for Apple to make sure that this demand starts to hit, which so far has been soft.
If we are to think, if you say that we should think about it in terms of installed base, and we do, let's say, think about it in terms of installed base, does it matter on that metric if customers are buying a 10R or they're sticking to their iPhone 7, let's say, which is one of the choices in terms of trade in your 7 and we'll give you a good price for the new 10R. I mean, does that matter because that person is still in the ecosystem? I mean, if we're really trying to change the way we think about it, do we need to change the way we think about that as well?
Look, I think that's sort of the bull thought here is that you have to think about how you're changing in terms of the ecosystem, in terms of what we believe is about 750 million active iPhones to date. But nonetheless, part of why the stock has just continued to have bad news is because the demand thus far looks like we're tracking about 210 million units versus the 220 the street
I guess the follow-up question, though, to that, Dan, is if that's the way bulls should think about the stock, why isn't the company thinking about it in that way, too? Why is there reportedly this fire drill going on in Cupertino to juice the sales of the 10R when we should be looking at an installed base, and it only matters who has an active device in their hand, no matter what the device is?
Yeah, look, and I think to that point, I think it's caught Apple off guard in terms of what we've seen demand on 10R, specifically out of China. And I think as they're looking forward into the December and March quarter, they're getting nervous in terms of some of the tea leaves they're seeing. And I think that speaks to why you're seeing accelerated price cuts and some of the issues that we're seeing in the field. And that's what really has been the main overhang on the stock, because the fear is you look in the December and March quarters, numbers continue to get cut, and so does the stock. And that's why right now at this point, the New York City cab driver is bearish on Apple.
All right, so Dan, we're talking about a stock that trades at maybe less than 15 times earnings on a trailing basis. It's got a dividend yield of over 1.5% as yields on long-term bonds keep falling. It represents an attractive company by many valuation metrics. Why are investors not buying into it?
Well, look, I think at this point, tech investors are viewing that the iPhone growth story and the decel is going to continue. And I think they're starting to look at a re-rate, which ultimately we think is going to be near term. We think we get through this period and the stock re-rates higher. But right now in the near term, the worry is that you're looking at $13 in EPS, a decel that accelerates into fiscal 20. And I think that's what's really causing the stock to move down, especially with transparency that's been reduced significantly. In our opinion, it is a white-knuckle period. We look through. We think this is a stock that ultimately has a 2 in front of it 6 months from now.